every time we dip in the markets, we have this big surge up within days, it seems, and it kind of re-energizes that upper echelon, right? And so for me, the trigger is very clear. It's just watch the stock market. In fact, you could argue that at this point, the stock market is the most important economic factor out there. It has become so massive. I mean, we're talking about, just the AI stocks in the US make up 40% of total market cap, just that one group, which is like 10 to 20 stocks, 40% of the entire market cap of the US. But the market cap of the US stock market is now almost 2 times GDP of the US. And so it really is dominant in terms of its power over the economy. So at some point, if you go into a flat sideways period or even a dip that doesn't see a resurgence, I do think that upper echelon pulls back. The lower income structure already is struggling, and that's where you see the upper income starting to pull back as well. There's been so many promises. I was so excited about Doge and cutting government spending, just the wastefulness, right? I mean, as the US debt now approaches $40 trillion, then our interest payments alone here in the US are like $1.2 plus trillion. Interest rates continue to be elevated, which means when we refinance this debt, it is just a snowball down the mountain that's just getting bigger and bigger and bigger. But in essence, even Trump coin, the coin, like it really pumped up crypto. Crypto was so positive going into the Trump presidency, and it has been honestly pretty negative, frankly, in terms of the outcome of some of this stuff. So in my humble opinion, there were a lot of great promises made. Very few of them have been fulfilled, unfortunately. And it really has been the rich have gotten richer. I have seen it firsthand. You will watch a market that's selling off, and all of a sudden you'll get this big green candle to the upside for 10, 20 minutes. And then miraculously, there'll be a Truth Social post about some deal with Iran, right? And what you clearly are seeing is that information is leaking out to the elites, if you will, and they are getting in on these trades ahead of time, and they are making literally hundreds of millions of dollars. And as a trader, listen, I've always been looking at the charts. But when it seems this, and I'm not saying, by the way, that this hasn't happened before. I mean, there's always insider information leaking out. But when it's this obvious and this massive, it really just alienates even more people. And I wish you would understand this. I wish the world would kind of take note. But unfortunately, it gets swept under the rug. I think as long as the markets are going up, people are willing to look the other way. Crypto has been so negative for so long. These relief rallies are fun to play because you do get big moves out of them. I mean, there's 30, 40, 50%. Now, it's not the old school big moves of thousands of percent, but at least for someone who trades stocks, it's still a very, very big move to the upside. But short term, I think we have a little bit more upside to go. And then I'd be very cautious. I think, again, we're getting to that max liquidity, how the more IPOs become public, the more money gets sucked out. Eventually, there runs out of money. And at that point, if the stock market comes down, there's just not enough liquidity to go into Bitcoin or altcoins, and they'll have another leg down. I think you still have to have some allocation, right? It's all about proper allocation. So for me, in general, I want to have between, 3 and 5% of my total assets in Bitcoin. It's not a massive amount like some people have, but it's just diversification. And right, if you look at what I have in gold, I have about 5 to 10% in gold allocated, gold and silver, frankly. And so it's part of my overall allocation in my investments. But I will say this, is that the one thing I don't like, and this is happening in the stock world too, is I don't like perpetuals. Bitcoin, to me, was potentially the digital gold because there were only going to be 21 million out there, right? So you have scarcity. And then what you have is people creating kind of derivatives off of Bitcoin that can trade. You don't even, like, when you play a Bitcoin perpetual, you're not really buying Bitcoin. And so essentially it's a way to just create more and more Bitcoin. People can play it without the scarcity, right? The idea is if you have 5 Bitcoin in the entire world and people buy up 4, there's only one left, and price will get driven up because there's only one left. But when you have so many places to go play, the futures market, the perpetuals, all these other things, to me at least, it causes some issues. And it's honestly, I think, something that is getting very pervasive. It's this gambler's mentality in the stock market, in all assets. We see the poly markets, the betting markets coming in, and it creates, honestly, it takes away from the core of what Bitcoin was. So I'm still liking Bitcoin. I still think you have to have it, but I just wish scarcity aspect was more in tune. And it is to some extent the gold market now too, right? I mean, gold, you have the physical asset, which at least I can hold the physical asset, which makes it a little bit different. And I guess you could take a Bitcoin off in a cold storage as well. But you're right, the whole world is going this way. And I wonder how this is going to play in with that 2029, 2030 cycle, if there's going to be blowups, right? Because you could look at the financial crisis in 2009, and say, hey, listen, this was specifically what was going on where the derivatives markets got out of control. And then we saw this massive blow up. And I do wonder if that could be something that also is a hardship later on that contributes to that bigger blow up. So S&P, I still think we are going to go down and test the 7,000 level by year end. But I do think there's a chance that if we break 7,000, we could go all the way back in to last year's high. Do I think we're going to make a new all-time high? I'm unsure about that at this point. As again, I think that there's a certain amount of this bull kind of mentality out there that is going to keep people buying and insatiable. But at the same time, the warning signs are so there. The betting markets, the leverage that people are taking, all of these factors of people rushing in are signals that something bigger is at a topping point. Again, a lot of that is 0-day options, which are as gambling as you can get in the options market, right? I mean, you are literally betting where it's going to end today's on the close, trying to make a big score or not. And again, those type of high risk characteristics, just like people buying homes in 2007 that were thinking, hey, I can buy this today and flip it next month for $100,000 profit. Those type of things are warning signs that something is amiss. There's an imbalance. We just don't know when that blow up is going to occur. There's been a group of stocks that have been kind of said, these are too boring. They're not exciting. I want to be in the AI companies. For instance, these higher dividend paying stocks, these old trusty ones that have been around for 30, 40, 50 years. A lot of those names are now trading at forward PEs of 8 versus some of these other ones that are at 30, 40, 100. I mean, heck. So I'm looking at those. They also pay a 7 to 10% dividend. So it's basically saying, hey, you hold this, we'll pay you 7 to 10%. If the stock goes up, that's just bonus at that point. So those type of things I'm looking at. I'm also keeping a close eye on gold and silver. If gold falls to about 3,500, I will be a heavy buyer there. Silver, anything below $50 per ounce on silver. And Bitcoin, if it can get down to 50,000 or below, I'll be accumulating pretty heavily there as well. So right now, mostly in cash with some short positions on the market, a couple longs like we're talking about, but I'm really waiting to pounce when we get that bigger corrective move. I think at least initially it's going to stay elevated for the next year or so. Even with oil coming in, we know that even before oil spiked on the Iranian war, inflation was already starting to turn up, right? So we have this persistent inflation. The 2% mandate, like you mentioned, I mean, not only are they changing the goalposts and saying, oh, well, we're not going to count that, we're not going to count this, but now, a lot of the Fed players and even the president are saying, well, 3% is not so bad, guys. Yet here the average American and really the average person in the world is like, how much, at 3% per year prices going up when people are already struggling to pay their bills. That's huge. So I would guess that it stays elevated for the next year, but then I do think it comes down as the economy weakens, right? Usually a weaker economy means demand slows, which brings down prices. And I do think that will happen. I just don't think inflation's ever going back below 2%. I hate to say it, but I think that's a long gone scenario with the U.S. debt where it is and the spending going on and the Fed's policies. I don't think we're ever going back below 2%, at least not in the next few years. They're going to spin it every which way in the government. They're going to spin it every which way at the Fed, change their goalposts. I think the average person knows how hard it is. Like we all see it out there. You see it in car prices and in all these other things. So I think that it just constantly puts pressure, which eventually reaches that boiling point, probably that 2029, 2030 period, and it all comes crashing down. I'm going to be focusing more on the gold, silver, and Bitcoin trade once they pull back to these current levels. The one thing I will say is if you look at the government, right, we had Doge at the beginning of the president's term. That was gone in a matter of months, and spending is now higher than it's ever been. And so unless we get people in there that are into austerity, U.S. debt is going to continue to climb. The dollar will continue to slowly degrade as other countries want to get away from the U.S. dollar because it gives the U.S. too much power over them as a reserve currency. And therefore, we want to buy generally physical assets. So gold, silver, Bitcoin, we're going to include in there as well, just waiting patiently in the next, let's say, 3 to 6 months for those entry points to come. My fear is that there will be a breaking point where the rest of the world forces austerity on the U.S. by driving interest rates high. And the way they would do that is by saying, well, we're not going to buy your debt unless you pay us 10% interest or 9 or 8 or 7 or whatever it is, but much higher than these are. In fact, the rest of the world did this to Italy and Greece. I think it was into 2011s. The rest of the world forced austerity on many European countries, and we saw what happened to the financial markets. Now, imagine that happens to the U.S. or Japan. That would be cataclysmic.